Hello everyone. Today we are taking a deep dive into this Forbes article, Jeremy Grantham's Bitcoin prediction has one big problem. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Decode Daily News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. Here is what started this whole thing. Jeremy Grantham went on CNBC and said his Bitcoin prediction was that it would eventually dwindle away with a whimper. And here is why that line alone caused chaos. Put a legendary investor, Bitcoin, and a prediction of zero in the same sentence, and the internet is going to react. But the more interesting question is not whether Grantham likes Bitcoin. It is whether a prediction like that is actually useful to someone trying to make money. That reaction did not stay calm for long. Kernen pushed back, the conversation became personal, and the clip quickly traveled across the internet. Now here is the part worth sitting with. Two strong personalities disagreeing on live television is exactly the kind of moment that spreads fast. But going viral and being useful to an investor are two completely different things. One gets you views, the other gets you returns. Here is where the real argument actually begins. But when the time frame is years and years, decades and decades, we are no longer talking about an investment call. And here is what that distinction really means. An investment call has a price, a catalyst, and a way to measure whether you were right. An opinion with no expiry date can technically remain alive forever, which means it never really gets tested or proven wrong. That is only the surface of the problem, though. An investor who correctly identifies a bubble 5 years early may still lose more money than the investor who never recognized it at all. Now think about how unfair that sounds. You can be completely right about where something ends up and still get financially wrecked on the way there. A stock everyone agrees is overpriced at $20 can trade at $50, then $100, before the market finally agrees with you. And that leads straight into the bigger question. Should Bitcoin be shorted now? If so, how large should the position be? What happens if it doubles first? Pause right there for a second. These are not small technical details. These questions determine whether a strong opinion can actually be turned into a real return. A prediction can sound brilliant on television and still leave you with no idea what to do on Monday morning. Here is the line that really cuts to the core of this. Saying that something eventually goes to zero is easy. The challenge is surviving everything it does before reaching zero. And that is worth repeating in your own head. That single idea explains more market losses than almost anything else in investing. Plenty of people have correctly called the end of something and still lost money waiting for the ending to arrive on schedule. So here is where the article draws its sharpest line. An investable thesis should explain what is mispriced, why the market is wrong, what changes next, and how long that change may take. Now compare that to what a prediction usually offers. A prediction can avoid all of that. It can stay open indefinitely, which makes it almost impossible to prove wrong, and that is exactly why bold forecasts work so well on television. And here is the financial reality behind that gap. Refusing to own Bitcoin may be a perfectly sensible portfolio decision, but avoiding an asset is not the same as generating a return from its collapse. Now let that sink in for a second. You can be philosophically correct about an asset and still walk away with nothing to show for it financially. Choosing not to own something protects you from losing on it. It does not pay you for predicting its decline. Here is the deeper question the whole article comes back to. The more useful question is not whether Bitcoin will still exist in several decades. The more useful question is what the current price assumes, and here is the rest of what that question involves. That alone is already a more useful framing than asking whether something survives for decades. But the full question goes even further than just the price. And that is where it gets specific. What could change those assumptions and whether the likely return compensates investors for the risks. Now that is a completely different mindset. Notice how much less dramatic that question sounds compared to a bold prediction of zero. But it is the question that actually determines whether you make money, lose money, or just spend years watching a debate that never resolves. So that is exactly where my take comes in. But real quick, before I give you my take, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. So here is what stands out to me about this whole exchange. Grantham has an excellent track record for spotting bubbles, and dismissing him just because someone owns Bitcoin would honestly be a mistake. But a track record for being right, eventually, is not the same as a track record for being useful right now, and that gap is exactly where a lot of investors get hurt. What I think gets lost in these viral television moments is that the audience walks away remembering a dramatic prediction, not a process. Nobody clips the part of the interview where someone asks what price, what catalyst, or what time frame. They clip the part where someone says zero. If you are someone holding Bitcoin or thinking about buying it, this is not telling you to sell or buy more. It is telling you to ask a much less exciting question. What does the current price already assume? And what would actually have to change for that assumption to break? So that is the story for today. If this kind of breakdown is useful to you, hit that like button and subscribe so you do not miss the next one. Let me know in the comments, do you think Grantham eventually gets proven right about Bitcoin, or is eventually doing all the work in that prediction?